Hello and a warm welcome to this Christmas special of Sydney Direct. I'm Natalie MacDonald. 2014 was supposed to be the year for the non-mining sectors to lead growth within the Australian economy. However, it's impossible to deny the role that the resources sector does play. So taking a look back at 2014 and what we can expect for next year, I'm talking now to Richard Robinson of BIS Shrapnel. Richard, thank you very much for joining us again for this Christmas special of Sydney Direct.
And a Merry Christmas to everyone.
Thank you. Okay, so we're doing a mining resources overview for 2014. Firstly, one of the major stories, oil. What does the oil price crash really mean for Australia?
For the Australian economy, a few things. First of all, it may have actually helped put with the downward pressure on the Australian dollar, and that's been good, and that is good. Secondly, the lower prices will feed into lower petrol prices, even with the fall in the dollar, because oil prices have come down about 30% since the middle of the year, and the dollar hasn't come down that far. So this is all going to feed in lower petrol prices, and lower petrol prices is almost like a de facto tax cut for the households. So they'll have more spending power, and they might lift spending in other areas because they don't have to spend so much of their weekly bill or weekly amounts on petrol. So that's good for households. Third, lower petrol prices will actually feed into inflation. So there's no pressure on inflation, and that means there's probably even less pressure on wages. The fourth factor is probably in terms of for businesses. They've got lower fuel bills, they've got lower diesel bills for a lot of the farmers and the miners and a lot of other businesses. And they'll also, with those lower wage pressures, that's probably good for profits because their costs will be lower. The next factor that's probably still a positive, lower oil prices, a big drop like that, and if it still may even go down a bit further, is probably good for the OECD economies and even China, because they're oil importers. So that's probably good for world growth overall. But there are some negatives for the Australian economy. The main negative is that we are an oil exporter, not vast amounts, but the main negative is going to hit these 5 mega LNG plants that are about to come on stream over the next 1 to 2 years. So the lower oil prices will feed into lower LNG and gas prices, and so that'll actually have an effect on our terms of trade and our export revenues. So that's probably the major negative. So it's, on balance, it's hard to say what's the bigger one, but probably the lower oil prices will probably give a bit of a boost to household incomes. I think that's probably the key.
Now, copper mining has really been a bit of a seesaw industry almost throughout the year, between a slide in prices despite the fact that demand has actually been rising. Is copper mining a dying industry?
Oh, I wouldn't say it was a dying industry. Copper's still got wide uses. And in terms of, you look at the developing countries, like the big developing countries like China and soon to be India, copper's used in electricity transmission and construction, automobiles, a lot of manufacturing uses. So I wouldn't say it's a dying industry. It's still got fairly reasonable demand. What's happened with copper? It's like a classic supply cycle again. They had an undersupply of copper for a lot of the last 10 years, which is, you saw very high prices for copper, even on a long-term real price sense. So that's encouraged a lot of investment, particularly in South America and other countries, but particularly South America. So what we're seeing is that supply now starting to come on stream and start to push those prices down. Now, probably for the next 2 years, you're going to see production outpace consumption, and the prices will go down further, stocks will rise. But probably within about 2 years, that'll settle down. You'll probably see some high-cost copper producers exit the market, and that'll start to balance the market. So then the prices will start to increase over long term. And the thing about copper production, they've still got to keep investing in copper to replace depleting resources. And that includes even some of the resources in South America and even resources in Australia. So I wouldn't say it's a dying industry. It's just one of those. It's going through a classic demand supply cycle, and it will come back.
It's a lot of negative across the board, kind of between oil, between iron ore, between copper, as we've discussed. Walk me through perhaps some of the winners of 2014, if there are any.
Well, I suppose the biggest winner for a while was nickel. So the ban on nickel ore exports by the Indonesians earlier in the year drove up the price of nickel from about under US $14,000 a tonne to almost $20,000 a tonne by May, and then everybody realised there wasn't actually such an undersupply of nickel, and there's actually there's still an oversupply of nickel, so the price went back to about US $14,000, but it's actually recovered a little bit over the last month. So it went through a roller coaster. It ended up a bit higher than early in the year, but I think probably the two stronger ones is aluminium and zinc. Now, aluminium and zinc, I just talked about classic supply and demand cycles before. 2 or 3 years ago, their prices crashed, and so it actually forced a lot of the high-cost producers out of the market. Like in Australia, we've seen the closure of 2 aluminium smelters in Australia. In terms of zinc, there's a lot of high-cost zinc producers have also exited the market. So the market's actually come back towards a balance, and at the moment, consumption's actually exceeding production. Now, there's still high stocks, but those stocks are coming down as with that consumption outpacing supply. So they've probably been, over the year, I think zinc's probably going to end up about close to 19% higher. I'd say an average for the December quarter over December quarter 13, and aluminium probably about 14% higher. That compares to a lot of other commodities that have actually come down through the year. So they've probably shown the best results in the year.
How then does all of this sort of tie into your pricing forecast moving forward into 2015? What can we expect?
Well, in terms of the aluminium and zinc, I think they've still probably got some upside, and as demand increases in China, and particularly as US demand starts picking up, there's a lot of zinc and aluminium gets used in the US. People got to remember that. China might account for more than a third, but the US is important to that incremental demand. China's demand will probably start improving, and within 5 years, you'll probably see Europe starting to pick up. So aluminium and zinc have probably got the best prospects. Iron ore will probably come out of its trough, but it's probably not going to go too high. Coal, we expect coal would come out of its trough, probably more so coking coal. Thermal coal's probably still oversupplied, but the Australian producers are trying to cut back production, and that'll underpin some sort of price improvement as demand increases. And oil's anybody's guess. No one picked the big crash, and there's a lot of people saying we could go to $40, or Saudis are saying $60. I think the way we look at it, you might get a seasonal improvement during the European winter. So, the next few months it might improve a little bit, but really there's still an oversupply in oil, so the prices will come back down. So it's hard to see oil being much higher, say, by the end of next year. So, but I think if there's any growth in the world economy, and we expect the US will keep improving and China will start to pick up, that will probably underpin some improvement in commodity prices over the next year.
Richard, thank you so much. We look forward to chatting with you in the new year.
Okay, thanks very much.
Our many thanks there to Richard for his comments, and viewers, thank you very much for watching. It may be the Christmas season, but do not fear, the Dukascopy TV team will be bringing you plenty more exclusive updates and FX analysis right through into the new trading season, so do stay tuned. For now though, it is goodbye from me.